Guys, welcome back to the Independent Investor channel. These stock pick of the month videos are super important to roll out to the subscriber base rapid fire. Let you guys know what I'm looking at. I own every single one of these stocks. We're going to do 12, make it a baker's dozen. I'm going to throw in an extra pick toward the very end. Again, all 13 of these picks I specifically own in my personal portfolio, either in my Roth IRAs or my brokerage account. These are fairly popular picks to roll out. I'm not going to get too in-depth on this, guys, but to prepare this list, to give you guys just an idea of my deliberation, I jump into my broker to start. I review income statements, cash flow, and balance sheets to take a look at all three of the metrics on the fundamental side. The only thing that's working here in these 13 picks on the technical side is Hyliion, which is the last SPAC play that I own about 600 shares in. But we're going to jump into this list. I'm going to rock these out. I'm going to try to get them out to you guys within about a 10-minute video so you guys can have transparency. If I go too deep anyway, you're not going to watch the video anyway. But you're going to want to know what I typically gravitate to month. I do jump into the brokers. I do use Seeking Alpha. I do try to get the street consensus. I'm trying to get the best and most optimal entry price, because when you're value investing, you can almost buy any of these at any given time. Johnson & Johnson being the best example off of my list. But for the most part, it may benefit you guys to look at where a stock is trading within its 52-week range, and that can help you whether or not you're getting a fairly good entry into the stock. So let's rock right through this list, guys. The first out of this is probably one of the best on the list. Heavy centric to healthcare this month, no doubt about it. Bristol-Myers Squibb, ticker symbol BMY, just a little over a 3% dividend at 3.11. It has a 29% payout ratio, and it's paid out that dividend for 13 years. Bristol-Myers Squibb is a leader in cancer research, one of the best in healthcare. It hasn't been one that I've historically owned for multiple years. It's been a new 50-share position for me. But for you guys that are looking at Bristol-Myers Squibb, there was some interesting research to show that when the stock price was recessed during the last recession that we had back about 10 years ago, Bristol-Myers would have served a 200% increase from that initial investment. I think here at the initial price or entry of $57 a share, right kind of in the middle of its 52-week range, 52 being the bottom end of the range, 68 being the top end of the range. So pretty good. I don't think it's going to sit here and stare at you and wave at you and give you all day to buy the stock. But I think at $57 right here, coming off of our last week's volatility, stock prices are really trying to adjust here, really are entering into some volatility, not knowing what's going on here with multiple things. And I think it's driving down some of these really good stocks. And Bristol-Myers is one of my top picks on this list. Next is Bank of America, dividend of 2.96. Interesting enough, I like all the 5 major banks, and I'll throw Wells Fargo in there, the most controversial pick. There was a couple blips on the balance sheet for Wells Fargo that were certainly worth paying attention to. Their book of business has shrunk over time, so I would definitely put that on the back end. If you didn't own any of the top, JP Morgan, Citigroup, definitely attractive. I like PNC. I like a lot of regionals here, but Bank of America is the one that took the cake for this one right here. I do own a 100 share position in Bank of America, so it's not just talking the talk, it is absolutely walking the walk. I own every one of these. Let me double check. Yes, I do. I own these. So it's worth coming on and sharing with you guys where I'm putting my money to work specifically. Dividend payout ratio just below 50% at 46% on Bank of America. Hasn't historically paid that 3% yield, but the dividend CAGR is fantastic with Bank of America. It's increasing its dividend, and its payout is really impressive. Now, it's only paid that dividend for 4 years. But I do think that Bank of America's book of business, unlike some of the other banks that I mentioned, specifically Wells Fargo, if you compare these two books of business, you can see that Wells Fargo has trended down in their book of business, whereas Bank of America has built up their business, close to $2 trillion book of business, if I'm remembering correctly. So very, very impressive, doing some great things. It's been stuck here in a trading range of $20 to $25. It's right in that range at the time of making this video, so we'll see where Bank of America goes from here. Valuation play, again in the healthcare sector with Pfizer, ticker symbol PFE. It's one of the few 4% and above dividend payers here at 4.04. It does pay out 53% of its earnings in a dividend, and it's paid that dividend for 10 years straight. Pfizer is one of those cornerstones in the portfolio. The way you want to interpret this list or these dividend stock pick awareness videos that I put out with, if you don't have exposure to these companies, take a look at them. You know, it's not going to hurt you to throw it into a watch list, put it into your healthcare watch list, and live to fight another day. But Pfizer is one of those companies that you could just put into the portfolio and hold for the rest of your life. Make it a lifetime holding. You're going to render the baseline a 4% dividend. It's been very, very consistent, very steady with that dividend. And Pfizer will work in most all portfolios. So take a look at Pfizer. The next one in the healthcare is CVS. CVS is an over 3% dividend yielder at 3.16, payout ratio at 28%. CVS is a beast. It's a huge company, great entry point. Fair market value, I think, shakes out at around $80. So right now, CVS has come off of its trading range, and it really has given you an optimal entry into CVS for one of these really good dividend payers. So really trying to provide those value plays for you guys to either at least throw in your watch list or take a look. We push out these videos for awareness and entertainment, obviously, but it's a lot more than entertainment for me, as again, I do own all these picks. The last one that I've got in healthcare, just to round out that basket, you can kind of see where some of my emphasis and where I think some of the play should be here in the short and medium term. If you don't own Johnson & Johnson, Johnson & Johnson is like shooting fish in a barrel, all right? If you want to call yourself an investor and you want to hold a portfolio and you want to justify owning that portfolio without Johnson & Johnson, good luck. I just don't see it. A diversified suite of businesses. It does pay a 2.73%. I was looking at my review on Johnson & Johnson, and comparatively speaking to its peers, it's just an incredibly ran company. It's one of those companies that's easy to invest in. 51% on the payout ratio, 57 freaking percent as a dividend king, a payout over the last going on 6 decades. It just doesn't get any better than that. Johnson & Johnson sells itself. It's usually on my list more often than not. It's one that I've owned for over 5 years and will continue to own this company going forward. It ought to slowly make us rich over time, no doubt about it. The next in staples is Pepsi. Pepsi pays just over a 3% dividend. Payout ratio a little bit above where I'd like to see it, but another diversified snack and foods business in the staples at 76%. It is 2 years away from becoming a dividend king. It's 48 years of straight payout and increasing its dividend. So great news there for all you guys betting on a proven winner, no doubt about it. I've been long Pepsi for a long, long time and will continue to be long Pepsi, providing a great entry here. Fair market value is above where it's currently trading, so we're looking at a really good opportunity with Pepsi. Back to financials here. Goldman Sachs has really provided that optimal entry here at close to 200 a share. Dividend at 2.48, payout ratio at 27%, and 9 years of consecutive payouts on Goldman Sachs. I think Goldman Sachs might be one of the most exciting in the financial space out of any of the names that I've mentioned. Goldman Sachs is a fantastic company. It's a global financial services offer, and I really think Goldman Sachs has a lot of runway going forward here. You're going to want to take a look at Goldman. I don't know if I would look at Goldman in a portfolio where you don't have a lot of other financials exposure, like let's say a Bank of America that I've already mentioned, or a JP Morgan, or even the sneaker play, which is Citigroup, which I feel like it's probably one of the best in the group, in my opinion. But Goldman Sachs made this list, no doubt for good reason. I think there's some exciting times coming going forward for Goldman Sachs, ticker symbol GS. Next, two are going to be in the defense subsector of industrials. The first being Lockheed Martin. Lockheed Martin is a long play. Lockheed Martin, unlike some of these other plays, it did make the list based on the quality of the company, but as far as getting an optimal price, that time has come and it is gone. Your optimal entry on this would have been below 350, even at around the 325 level. It just got crushed there over the last few weeks. Here trading at around 375, 380. I do think the stock still has some upward momentum, but at 2.49 on the dividend and 39% payout ratio, Lockheed Martin has paid out for 18 years straight on the dividend. It's one of those that you can just buy and hold forever. I've had probably not one single stock in my community of people who are more bullish on Lockheed Martin then coming back to me and say, Ryan, this is a stock that you've got to buy and hold forever. I couldn't agree more. Financials are fantastic. The connectivity with the U.S. government and contracts in the defense space is incredible. Those contracts will continue to be very lucrative for Lockheed, and you want to be a participant in this company because I really think you're going to value those contracts going forward, and it's going to be very lucrative for shareholders going forward. The next is Raytheon Technology. Raytheon is fantastic. Just completed its merger. It's got a dividend of 3.06. I think its value right here in the low 60s. I think you're getting a really good entry. I think this thing is going to be knocking on the door to 100 right around the corner. 61% payout ratio, not too shabby there, and 26 years straight payout on the dividend between Raytheon, ticker symbol RTX, Raytheon Technologies, all right? With its newest merger with United Technology and the spin-off of some of those other businesses that weren't true to their core, I really think the synergies that are created by the two coming together are going to be very, very exciting. Glad to own the shares going forward. It'll be a lot of fun to watch where they go. The next one could be the most bullish company that I have on this list, actually. It is Walmart. And Walmart, if there's any company out there that's going to be going after and providing some competitive advantage for the consumer, basically, which what Amazon is doing is impressive enough, but they've got to have some competition online. Walmart, make no mistake, is providing that competition. Walmart's an incredible company. It doesn't provide you any type of optimal entry into the stock at any given time. It really is a fairly expensive stock all the time. So if you do want to own Walmart, you're just going to have to pay up for it, which is what I have done. I really think there's a lot of growth there. I was surprised to know, I've always known that the dividend with Walmart has been fairly anemic at 1.65. The payout ratio is an extremely attractive 43%. We can live with that. But what I didn't know is Walmart's paid the dividend for 47 years. It is almost a dividend king. I did not know that. And something that I came across and just got my attention. I don't really own Walmart for the dividend. I really own Walmart for the transition that I do see in Walmart, going from really a nice value play into more of a growth story going forward with their online presence as they continue to dominate in the brick and mortar space. I hate to even say that because it's really not a place you want your money, but their transition into the online space is incredible. They will continue to win share, and they'll continue to put money to work there as they continue to win share online. Next, the only technology play I have on this list, which is very, very rare for me. It's my favorite sector, but Intel made the list here on the dip. You're getting a fantastic entry here, sub 50. It's not going to stay here very long. 261 on the dividend payout, 27% payout ratio with Intel and 6 years on the payout with Intel. So not too impressive there with their consistency. I wasn't really impressed with a pure play dividend play. But I think Intel here as a value play is definitely worth talking about, and at least adding a token position in the technology space. And finally, in the bulk of value plays for going into next month, August 2020, Philip Morris, ticker symbol PM. It's the only dividend payer on this list over 5, let alone over 6%. At 6%, Philip Morris is a beast. It's a money-making machine. They are expanding their book of business, 92% on the payout ratio, but man, they make a killer amount of money. And 11 years straight on the dividend payout for Philip Morris. It is a beast. And like I promised you guys, Hyliion is the only one that we cannot use fundamentals outside of what has been declared in the existing investor presentation that's been provided. I think it's fantastic. I actually invested in the company based on what was provided. Currently holding 600 shares here. We're looking at the technicals, specifically the MACD, and we're looking at the a couple other things with Hyliion. Looking at September as a potential for a merger date, so we'll continue to monitor those shares, guys. But I mark my word, I don't believe the company is going to remain below 20 for very long, okay? I know it's trading on news right now, and I know that it is awaiting the finalization of the mergers. There's going to be a lot of things that are going to happen with institutional buyers stepping in, placing Hyliion in some of the more speculative mutual funds, some of the ETFs, some of the sector-specific ETFs for industrials. Hyliion's going to make some of those lists, whereas right now they're kind of not included in any of those discussions. All the institutional buyers will wait for that merger to come to a closure, and when that's going to happen, nobody knows. But Hyliion is my baker's dozen pick. Ticker symbol is SHLL. It still trades under its SPAC. Blank check company, Tortoise Acquisition Company. So take a look at it. If you're interested in a little bit of a speculation play, it is just that for me, as I have very, very high hopes from everything that I've looked at with Hyliion going forward. Guys, thank you so much for tuning into the message here. You want to make sure and subscribe to the channel. Leave your comments at the bottom of this video. Share the message with anybody out there that may appreciate an awareness piece on stocks that I personally invest in. I roll these out about once a month to provide some transparency. Remember, it's not necessarily about what you say, it's about what you do. And I own every one of these stock picks that I rolled out to you guys for entertainment purposes only, of course, but hope you guys enjoyed this offering for the top stock picks for next month, August 2020. Guys, thank you so much for tuning into the message, and good luck in your investment future.